Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, managing director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100 as investors digest the latest round of economic data and as yields hit fresh highs. Chris, it's great to see you as always. Welcome back to Trade Talks. And again, we spoke about this on Monday. Feels like August trade taking a little bit off the table today.
Absolutely. You've had nothing in the macro over the last couple of days that kind of changed the overall arching picture of the potential for a soft landing. Unemployment's still relatively low, indicating a tight labor force. Retail sales were relatively positive, and June got ticked up a little bit. So what you're looking at there is consumer spend. Housing starts were strong across the board. So again, that's given the Fed pause. If you look at what came out through the minutes yesterday, nothing that we really didn't already understand, that they're kind of still concerned about inflation. Again, you have Jackson Hole next week, so you get plenty of Fed speak around that's coming out. But the next meeting won't be for another month. So you get a full another month of data coming to the September meeting. The CME target tool still has an 86 chance that they're going to leave rates unchanged. But the question is, how long will the terminal rate remain higher? And again, that's the question that the markets are seeing here. I mean, if you look at the Nasdaq 100, the index is off about 6.5% since we hit the 52 highs in July, but you're still up well over 35%, still a strong return. So I agree. Summer trading, taking some off the tape. Earnings kind of were out, as we talked a little bit about on Monday, better than expected across the board, but the winners aren't getting that 1 to 1.5% pop they normally get. They're only getting about a half to 0.75%, but the losers are getting punished a little bit more. Case in point, Cisco today out with earnings, new 52-week high, but it's now dragging a little bit in the index, top performer there. And when you look at it as a whole, it's really not that bad. Typical August trading, the index is still trading up over 35%. It's still relatively range bound, though we are going to test some support here.
All right, and let's take a look at your first chart here with some fresh technical levels to watch on the Nasdaq 100. I mean, much of a change since Monday?
A little bit, yeah. We actually broke support level. So we broke the 15,000 level, which was just below the 50-day moving average. We've been bumping up against it as resistance starting at the end of last week. We're moved down, and we're testing that 14,725 level I talked about on Monday. It seems to be holding at the moment. Index is trading at the lows of the day. We really sold off nicely this afternoon from about 1 o'clock until now over the last 2 hours. See if we get a little bit of a bounce here into the last hour of trading. Ideally, 1475 should hold. If it doesn't, supports at 14,636. Resistance now is above at that 15,000 level, and the 50-day, as I mentioned before, is at 15,185. Note again the relative strength. The RSI at the bottom, it's a 36 handle, Jill, nearing that oversold condition. Really, when you're looking at that, is you still got a little bit more room down to the downside here. But usually when we start to hit that very level before you get to oversold, it starts to mitigate a bit and kind of flatten out. So we'll see if that carries through tomorrow and the early of next week. If we can base here a little bit, it's kind of where we based at the end of June before we had the big run up to hit the 52-week high. So let's see if we can repeat that performance.
And then, Chris, let's take a look at the constituents leading the way or lagging. Is the breadth, I mean, we see the index is down just about 1% here. I mean, is it all over?
Decidedly bearish, decidedly. 80-20 downside. As I mentioned before, some of the big boys are up, though. Cisco is up over 3.5%. It was up much higher again, as I mentioned before, making a 52-week high. Alphabet's up over 1% as well. Moderna's up as well. But on the flip side of it, Apple's off 1.5%, Meta's off 2%, Tesla's off 2%, Microsoft's off 0.5%, Costco's off 2%, Netflix is off 2%. So any one of those is not that big overall. But when you add it up, 80 down, 20 up, we're lower by about 0.8%, which makes sense here. We'll see if we can rally into the end of the day. A couple of companies still reporting. We got Ross Stores, then Nasdaq 100 member reporting after the close on the retail side. So still some positives there on the retail side. Could be good for the index, but again, we'll go where the macro goes. And as you said to start off, wherever the 10-year goes is where this market goes right now. Right now, the 10-year yield is at a 52-week high.
Well, I'm curious to see what Ross Stores does, right? I mean, the discounters have really been, retail. It's the haves and the have-nots. You cover retail, the companies.
I do.
Discounters, I mean, look at TJ, look at Ross.
TJ had a good one, not NASDAQ listed, but they had a good report the other day. Walmart was up. They've given back some, hence why the Dow is slipping a little bit today. The numbers aren't bad. The question is of the sustainability of those numbers across the board. And then if you talk to a number of the retail analysts and you look at the reports, there are some major concerns. moving forward. So when you look at rents that are higher, people are paying that. New York City is the highest place to live right now in the U.S. across the board. You look at the potential for what student loan paybacks are going to be, even though you get a 1-year forgiveness on that. But October, they're going to start to come back. They won't hit your, if you fail to make those payments, it won't hit your credit rating for 1 year. But still, that's extra spend in your pocket that you're not going to have to go out and buy stuff. And if you're not buying stuff, those retail sales that we saw that were so nice for July may be leaking come September, October, and that's the fear moving forward.
Well, perhaps, versus discussing student loan forgiveness, how about revising the system in general? I mean, they're still going to get charged interest. It's the interest that they can't, get unburied from. I mean, that's regardless
Right.
if there's a moratorium on it or not.
Right. Look, I'll throw another one out there that goes right to that same point. Look at credit cards. Credit card debt has increased over $1 billion. So it's forecast to be about 750 for the last period. It's 25% higher. Higher rates right now, north of 5%. Credit cards, most of them are north of 20% right now for folks. So again, that interest payment that you're making on that is, again, extra money that's out of your pocket, not going to be to spend. It would be nice to see a full restructure of the whole item as opposed to the headline grab going to the student loans, and you can lump so much more into there. But unfortunately, this government's not going to change that. Nothing's going to change from that end because you just don't have a unified front on that point for the student loans. Unfortunately, so many people, it buries so many people. Having been one, you probably one too. It takes a while for people to get out of that. It's like having a second mortgage.
Right, of course. Well, Chris, there's another data point for you as well, courtesy of Affinity Solutions. We had $2 trillion of stimulus in the system. Believe it or not, consumers still have about $500 billion of that, so let's say a quarter of it. I'm surprised it even lasted that long. But once, this is the last of it here, then to your point, couple that with high interest rates, student loans are going to have to be paid back. When you start to think about it, okay, what makes sense from the consumer space? Discounters. So it goes back to your original point with Ross Stores and TJ.
Very interesting to see what they have to say this afternoon.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.